Let us see the next question. Following is the abridged balance sheet of Alpha Limited. Average means concise balance sheet is given. Share capital is rupees 1 lakh. P&L account is 17,000. Current liability is 40,000. Land and building is 80,000. Plant and machinery 50,000. Depreciation 15,000. 50 minus 15. 35,000 is the WDV of the plant and machinery. It is added to 80,000. So the total of both of them is 1,15,000. Stock, debtors and bank. Total of this three is 42,000. Liability side total is 157. Asset side total is 157. With the help of additional information furnished below, you are required to prepare the first question, trading account, second question, P&L account, and the third question, balance sheet as on 31st of March 2020. The company went in for reorganization of the capital structure with the share capital remaining the same as follows. Share capital 50%, other shareholders funds 15%, and this is nothing else but it is the P&L account. Because you can see that over here the P&L account information is given. %, debentures of 10%, creditors 25%. Debentures were issued on 1st of April, interest being paid annually on 31st of March. Land and building remain unchanged. So opening was 80,000, closing will also be 80,000. Additional plant and machinery has been bought, and further rupees 5,000 depreciation written off. So there is an addition of the plant and machinery, and depreciation of 5,000 were written off. Total fixed asset then constituted 60% of the total gross fixed and current assets. Working capital ratio was 8:5. Working capital ratio is nothing else but it is the current ratio. Quick asset ratio was 1:1. Always remember, 1:1 does not make a sense. Receivable, that is the debtors, 4/5 of the quick asset to the sales ratio revealed a credit period of 2 months. Means average collection period is 2 months. There were no cash sales. Return on net worth was 10%. So this is a slightly new point for us. It is the profit divided by net worth into 100. Gross profit was at the rate of 15% of the selling price. So GP ratio is given to us. You have to ignore tax in your calculation. I request all of you to go through the question, and I want you to write in the chat box that say this balance sheet which is given to us as the example is of which date. I request all of you to go through the question and tell me the balance sheet is given of which date. Dear students, we understand that the question is providing the information that say with the help of the additional information you are required to prepare a kind of financial statement as on 31st of March 2020. So definitely we understand that say this is provided to us as on 31st of March 2019. For that date the balance sheet is provided to us. My question to all of you is this. Listen to my question. that as on 31st of March 2020, what must be the value of the debentures? I request you to put answer in the chat box that as on 31st of March 2020, what must be the value of the debentures? Please put your answer in the chat box. Friends, over here, language of the question is very clear. The company went in for the reorganization of the capital structure with the share capital remaining the same, like that information is given. You can see that the opening equity share capital is given to us in the question, an amount of 1 lakh. And so the closing equity share capital would be once again 1 lakh. Opening and closing would be same 1 lakh. This 1 lakh is representing 50%. So the total would be how much? 1 lakh divided by 0.5, that comes to 2 lakhs. 2 lakhs into 15%. Closing P&L balance 30,000. 2 lakh into 10%. Debentures 20,000. 2 lakh into 25%. It comes to 50,000. So this is the liability side of the balance sheet at the end of the year. I request all of you to write down answer along with me. Working note number 1. Calculation of liability side of balance sheet as on 31st of March 2020. Column number 1, particulars. Column number 2, percentage. And column number 3, amount. In first column, we will have equity share capital. That is 50% of the total liability, and it is an amount of 1 lakh. Below equity share capital, it is other shareholders' funds, which I replace with the P&L account, which is 15%. Then 5% debentures. It is 10%. Payable, that is what we understand, creditors 25%. And then we will have the total. Friends, total will be shown as 2 lakhs. It is 1 lakh divided by 0.5. This 2 lakh will be split. It is 2 lakh into 15%. That comes to 30,000. 2 lakh into 10%. That comes to 20,000. And 2 lakhs into 25%. That comes to 50,000. This is the way we are required to show the balance sheet, that is liability side of the balance sheet at the end of the year. Please write an answer. Total of the percentage is 100. Okay. Now reading this component, second adjustment. The question is providing the information that total fixed asset constituted 60% of the gross fixed and the current assets. So we can say something like this. Everybody is requested to pay attention. Working note number 2. See, the total of the liability side is 2 lakhs. And the total of the asset side would also be 2 lakhs. So as far as the total assets is concerned, it is an amount of 2 lakhs. that is divided into two parts. One is fixed asset and another is current assets. What is the fixed asset value? Fixed asset value is say 60%. So what will happen? It is 2 lakhs into 0.6. That is 1,20,000. Current assets would be balancing figure. So it is 2 lakhs minus 1,20,000. That comes to 80,000. That is the way we can have the bifurcation. Further, it has been provided to us. Land and building value remain unchanged. So it was 80,000. It will remain same 80,000. As far as the plant and machinery is concerned, it is balancing figure, that is 40,000. So that is kept as balancing figure over here. And this 40,000 is say basically calculated in this way. That is, we have to understand it in this way. Depreciation of 5,000 is written off in this year, and opening WDV is 35,000. So it is 35,000 opening WDV minus 5,000 of the depreciation. So basically the closing should be 30, but instead of that it is 40. It means that so the 10,000 is the purchase during this year. And it has been given to us also in the question that additional plant and machinery has been bought. What is that amount? Based on this working, we can say it is an amount of rupees 10,000. So we can have working note number 2, calculation of assets. I request all of you to write down answer. Next question. The receivable, that is the debtors. Oh, I'm sorry. I forgot to read this portion. The working capital ratio was 8:5. Dear students, we can see as far as the current assets are concerned, current assets are 80,000 and current liabilities are 50,000. So this ratio is 8:5. So this information is only giving a confirmation that we are going in the correct direction. So this is of no use to us as far as the calculation is concerned. Quick asset ratio was 1. So this information will be useful to calculate the stock. We'll assume that there is no prepaid expenses. Okay. Working note number 3. Calculation of stock. In the breakdown, quick ratio is equal to current assets minus stock divided by current liabilities. Quick ratio 1. Current assets is an amount of 80,000 minus stock divided by current liabilities 50,000. 50,000 is transferred on the left hand side, so it goes in the multiplication. So 50,000 into 1 is equal to 80,000 minus stock. Stock is transferred on the left hand side, so it becomes positive. 80,000 minus 50,000. Stock is 30,000. Write an answer. Next, receivable, that is debtors, is 4/5 of the quick assets. So from the quick assets, we can compute the debtors. So working note number 4. calculation of debtors. It is 4 divided by 5 into quick assets. It is 4 divided by 5 into current assets minus stock. It is 4 divided by 5 into 80,000 minus, what is the stock value? 30,000. Eighty minus 30 is 50. 50,000 into 4 by 5. That comes to 40,000. That is the way the debtors are calculated. Further, it has been given the receivable 4/5 of the quick asset to sales ratio revealed a credit period of 2 months, means average collection period is 2 months. Very good clarification is made, which we make assumption otherwise there were no cash sales. So working note number 5, calculation of sales. We have to understand it like this: amount and time period. Amount of the debtors is 40,000. That is reflected the time period of the 2 months credit sales. 2 months credit sales is 40,000 rupees. So what would be the sales of the entire 12 months? That is what we are required to calculate. So the answer would be 40,000 into 12 months divided by 2 months. So 40,000 into 6, that comes to 2,40,000. That is the way the sales is calculated. Dear students, over here we have to understand the language of the question is very clear. That's the date receivable means debtors to sales ratio revealed a credit period of 2 months. It means that whatever the debtors that we have, that is an amount of 40,000, is indicating the credit sales of the last 2 months. So 40,000 is the credit sales of the last 2 months. So for 1 month it is 20,000. For 1 month it is 20, and for entire year it will be 240. Working note number 6, calculation of profit, because next information is the return on net worth. So it can be calculated as net worth into return on net worth. As far as the net worth is concerned, it is consisting of the equity share capital plus reserves and surplus. So friends, we understand that the net worth is 1,30,000 into 10% is the profit. So we understand, let's say net worth is equity share capital plus reserves and surplus into 10%. 1 lakh plus 30,000 into 10%. So the profit can be calculated like this: 30,000, or otherwise we can also understand that profit can be found like this also. See, this is the closing P&L account balance, 30,000. And you can see that so the opening P&L account balance is given to us in the question as 17,000. So 30 minus 17. Difference of both of them is the current year profit 13,000. So the closing balance is 30,000 minus opening balance of 17,000. So again, if at all we have not been provided with this return on net worth information in the question, yet we can calculate the profit. The next question is, so next information is GP ratio. Of course, that is useful for GP. Working note number 7. Calculation of gross profit. It is sales into GP ratio. The sales amount is an amount of 2,40,000 into 15%. That comes to rupees 36,000. That is the way the GP is found. So we have been able to gather so far total of the liability side, total assets, its bifurcation between fixed asset and current assets. Fixed asset is further bifurcated between land and building and plant and machinery. Stock using the quick ratio information. Debtors using 4/5 of the quick assets. Calculation of the sales. Over here you have to be little bit careful. Let's say this 2 months credit period is provided to us based on the closing. Profit calculation, that is return on net worth information, and gross profit. Now there are 3 things to be done. One is trading account, another is P&L account, and the last is balance sheet. I request you to prepare the trading account and put your answer in the chat box. So friends, we understand that over here the trading account of Messrs Alpha Limited, in that column number 1 particulars, column number 2 amount, column number 3 particulars, column number 4 amount. On the credit side we will have by sales. It is an amount of 2,40,000. Again we will have the closing stock. Which we have calculated. The closing stock is 30,000. Debit side we will have the opening stock. It is 21,000. GP ratio is there 15% and gross profit is 36,000. Credit side total is 2,70,000. So now we will have the balancing figure like this: 270 minus 270 minus 36 minus 21. That is 2,13,000. So purchase would be found as balancing figure. I request you to take down answer for the trading account and try to complete the P&L account on your own and tell me what is the balancing figure about. So on the credit side we will have Gross profit. Gross profit is an amount of 36,000. Then we will have depreciation, that is an amount of 5,000. Then we have interest. The amount of the debt financing is 20,000 and the rate of interest is 10%. Sorry, rate of interest is 5%. So the amount of interest is 1,000. Net profit, it is 36,000. So we understand that, so the credit side total is 36,000 minus debit side, it is 5 minus 1 minus 13. So expenses will be 17,000. That is calculated as balancing figure. So you make something like this. So that will remind you in revision. Let's say this was found as balancing figure. So please write the P&L account and then prepare the balance sheet on your own. So let us see how to calculate the answer. Equity share capital, there is no change. Next is reserves and surplus, that is P&L account. It is 17,000 is the opening balance. Profit of the current year 13,000. So the total would be 30,000. Then we will have the 5% debentures. It is 20,000. Then we have creditors 50,000. These things we have on the These things we have on the liability side. 1 lakh plus 30,000 plus 20 plus 50. So the liability side total is 2 lakhs. On the asset side, land and building, it is an amount of 80,000. Plant and machinery, opening balance is 35,000. Depreciation of this year is 5,000. There is a purchase of 10,000 which we have calculated above. So the total is 40,000. Then we have stock, which is calculated by us 30,000. Then we have debtors, 4/5 of the quick assets. So that is an amount of 40,000. And we know that the total current assets is 80,000. So the remaining is the cash in bank. It is 80,000 minus 30,000 minus 40,000. So the answer would be 10,000. So the total of the assets would be 2 lakhs. This is the way we are supposed to make the calculation of answer. This cash in bank is found as balancing figure. You may write other current assets on a safer side because nowhere it has been given it is cash in bank. So that is also a valid answer that you may present. So revision of the financial statement. In that trading account, first of all, has been prepared. On the credit side, we have the sales and closing stock. On the debit side, we have the opening stock, purchase and the gross profit. Purchase is found as balancing figure. P&L account, that is nothing great in that. Gross profit on the credit side, net profit on the debit side, depreciation is given, interest is given, and expenses are calculated as balancing figure. And we understand that say balance sheet of Messrs Alpha Limited on 31st of March 2020. This is the way we are required to show it.